Colgate is in focus on the back of its Investor Day takeaways. First of all, summing up what those Investor Day takeaways look like, Colgate is growing ahead of its peers. Colgate retains a roughly 3 times market leadership versus the number 2 brand in the market. Their premium mix is 2.5 times CY21 levels and it's growing at 6 times the rate of the market, which is very positive. Premium mix headroom is from the current 19% to 40 to 60% is the kind of leverage that they're seeing going ahead. And ad spends have stepped up to 16% of sales with an upward bias. Now the street is concerned that in terms of their ad spend stepping up, how much more room for margin expansion does this leave? And the management has also said that they are right now prioritizing growth over profitability. So maybe that read-through is slightly negative and that is why the stock is slightly under pressure. E-commerce is margin and premium accretive going ahead, and Colgate's e-com salience is in early double digits versus 6% for the category. They're deliberately prioritizing growth ahead of profitability, and they say that the GST inverted duty issue will reflect in the base from Q3. So this is also something that we are going to be watching out for. However, they say rural consumption remains a major long-term opportunity. On Palmolive, they say they remain interested in the business. There is no disinterest from them or the global parent company, but they've partnered with Bombay Shaving Company to manage Palmolive's end-to-end D2C and e-commerce operations, while Colgate will manage its modern as well as general trade. Now coming to the brokerage view on this, Nuvama maintains their buy rating with a target price of 2,750 rupees per share, implying a 40% upside to the stock price. They say double-digit growth is likely to sustain. They see Colgate's ad spends absorbed well by the company, and Colgate's whitening share is well ahead of its overall market share. And they also say that in the sensitivity segment, Colgate is acting like a challenger. The only major risk to Colgate is Sensodyne right now because they've announced a very hefty capex program. So all in all, that in a nutshell sums up the key takeaways from Colgate's Investor Day.